If you're thinking about investing for the first time in 2026, but you're unsure of where to start and you're worried about making a mistake, this video is for you. Most people don't avoid investing because they're lazy. They avoid investing because they're afraid of making a mistake. So today I'm going to be walking you through exactly what I would do if I was starting all over again from scratch. We're going to be covering first off what is required to get going, as well as the mindset you need to have to be successful when it comes to investing. This is going to be covered with no hype, no jargon, just a clear starting point for you to get started. But before we go any further, there are three things you need to keep in mind when it comes to investing. First is you do not have to be an expert to get started. Second, it doesn't require a lot of money to get going. And third, it's okay if mistakes happen and you're not going to get everything perfect the first time. Also, it's important to remember why you should invest in the first place. Inflation continues every single year, whether we like it or not. Recent inflation has been hovering right around 3%, meaning that your money next year is worth less than it is this year. The best way for you to beat inflation is to invest your money. Your first investment is not about being perfect. It's about building momentum and getting habits together so that you're successful long term. The starting goal isn't to go out there and try to beat the market. The starting goal is building habits that you can stick to moving forward. And the first step that you need to take is open a brokerage account. The brokerage account is kind of like a bank account for your stocks. It isn't the actual investment itself, but it's where you go to make investments and it holds the stocks that you move forward and buy. This very first step is where a lot of people get caught up. They ask questions like, well, which platform should I use? What if I pick the wrong one? But here's the truth when it comes to your brokerage account. A bad brokerage account is the one that you never actually open. Examples of brokerage accounts that you can choose could be Robinhood, Vanguard, E-Trade, Charles Schwab, or even Fidelity. And again, this is just the platform that you choose to purchase the stocks in. You're not marrying the platform. And again, it's more about just getting this first step opened of where I can have a place to go and purchase my first stocks. Once you pick a brokerage and actually make an investing account, this is a huge psychological win. You don't have to even invest right away. You already have an investment account set up and you can always come back to it and start funding. Now, once the account is open, the next natural question is, what should I invest in? And you may be expecting me to recommend specific stocks, but I'm going to recommend starting with a diversified index fund that gives you broad exposure to the full stock market. An example of this approach would be VTI. VTI is designed to cover the entire stock market, where you would hold thousands of different companies ranging from large, mid, and small in size. This gives you very broad ownership across all different sectors and varying businesses. The great news here is historically, the stock market has returned around 10% per year. And now this doesn't mean that it goes up every single year. There will be years where it goes up. There will be some rough years where it goes down. But from a long-term perspective, the entire stock market will grow. And if you stay invested in VTI, you will benefit from this. When you invest this way, you're not asking yourself constantly, did I pick the right stock? Because you own the entire stock market. You are benefiting from the growth across all of these different companies. This simplicity is perfect for a beginner. So this is why if I was starting over again, I would start my account with VTI. And again, it's not flashy. There will never be hype around this, but it's simple, effective, and allows a beginner to have a very simple approach when it comes to investing. Now, the next question is, how much money do I need to start investing? And this is also where the myths start to come into play. You do not need thousands of dollars to start investing. If I was to start investing today, I would find a number that makes sense and makes me comfortable to live within my means on my monthly budget. This could be $50 a week. This could be $100 a month. Whatever works for you and whatever amount you have available is a perfect amount to get started. The exact number that you choose matters far less than what you're doing with building the habit of consistently investing. And this is why it's more important to build a consistent habit than to worry about how much money I'm putting in the market. Finding a manageable amount to invest on a monthly basis will do far more for your long-term results, especially when you're invested in something like VTI, than worrying about trying to time the market perfectly or trying to go all in at once. Now, along the lines of being consistent, this is where I also recommend automating your investing. When you automate your investing, you take the emotion out of it. You don't worry about the highs of the market. You don't worry about the lows of the market. And you're focused on consistently adding to the market so that you gain for the long term. All of the brokerage accounts that I mentioned before have this built into their platform so that you can have this within the settings when you go and purchase things. And this makes it so investing becomes an automatic process. It becomes part of your life routine, and it's something you no longer have to worry about or stress about. Now, once your account is set up and you have automated investments going within VTI, the next step is probably the hardest one, and it's maintaining a strong mindset. This starts with what you should ignore when it comes to the news that you start hearing about. If I were a beginner, I would really try to ignore the daily headlines that come out. The media loves pushing the next boom, the next bust, the next gigantic market crash. And all this does is confuse new investors and makes it so everything is anxious and stressful. The biggest enemy of new investors isn't a lack of information. It's having a overreaction to that information. Overall, markets go up, markets go down, and this is completely normal. Your job as a new investor is to stay consistent and not let this affect the habit that you're trying to build. I also recommend not checking your account all the time. Often it's better to check your account less than trying to check it every hour of every single day. Building on this mindset early is really critical because, again, we are not trying to maximize returns. What we are trying to do is build habits, to build confidence that you can do this, you can invest, and over the long term, this just becomes part of the habits that you have within your life. Once this investment foundation is set, learning new things within the market becomes easier. You're going to want to learn about individual stocks and what stocks you enjoy and want to buy. You're going to be able to deal with the emotional stress that comes from ups and downs of the market. And this allows you to focus on the long term and not get caught up in the short term news that we see and are hit with all the time. And you don't need to rush learning when it comes to investing. What you need to do as a beginner is to open that account, get your account invested, and create this habit so that all of this becomes very natural for you. This allows you to focus on the long term and stay consistent. So that next step is really up to you. Feel free to throw in the comments below, what trading platform do you like to use when it comes to investing? If you learned something today, please like and subscribe to this video so that you don't miss any of my future videos that can help build your knowledge as you start going through your investing journey. Thanks for watching. We'll see you next time.